Hey everyone, Sterling here with the review from the 24th. It is Tuesday, and we'll go over what we've seen first in the room today. What we're looking for is we're looking for the third push down in the euro and the pound, as we were talking about yesterday. And I think you could consider this move we had today in the euro. The third push is a 15-minute chart of the euro, and you could consider it the third push. We were talking in the room. Some people were considering the euro for a bounce, but one thing I said is it hadn't given the third push, and that's why I was really only looking for a push to the downside, unless it had given a stopper on the lows, as kind of the pound did. But uh, on the euro, we didn't have that. Anyways, with the euro, what really started this last leg down was a push above the last highs, and we kind of discussed this in the room, how going into the New York session, a lot of times they'll set, lower high, lower low, lower high here, comes down for a lower low, lower high, comes down for a lower low, and as that happens, stops go from anybody that's short moves their stop from here to the next high, down to the next high. That's generally why during New York they'll come back up, tag it. In this case, if they're going for a move down, they'll come up during the New York session, tag a high, and that's where they reverse the price from. That's why with the pound, when we were looking in the room during the New York session today, uh, I like this move above those Asian highs. I was just looking for it to complete a topping formation. I wanted a clear topping formation because the level it was bouncing off of, or the level it was holding on here, was really no point of confluence. We'll go out to the hourly chart, and there was really no reason to believe it was going to hold at that point. You had the 200 EMA on the 15-minute chart was really the only reason that it was stopping there, and that's why I wanted a clear topping formation with clear candle formation on the second test of the topping formation. Never got it, therefore I never got the entry on that because it just wasn't given, satisfying the criteria. Now, with this move here in the pound, we'll go out to the hourly, and we've not broken below the lows of the third push here. So I'm still considering the pound to have given a second push. Now, it's important to keep in mind something we talked about yesterday, and that is the fact that the pound's ran 230 pips. So technically, it's hit the weekly criteria. So if this thing did just, let's see how far move this is. It was about 60 or so pips today on that move from the stop run. And so, zoom into the 15-minute real quick. And if this move came down, I'm going to mark the lows. I'm on lows sitting here at about 84. Now, you guys know how I love the 80 level on the pound. It tends to turn the pound. So as we go out to the hourly, we look at the, shrink this up. As we go to the pound, look at the hourly chart. If we come down and we just create a stop around those lows blowing through the 80 level, would that be considered the third push? Well, let's measure it from the highs from New York today, and technically that would be about 77, 78 pips, but what would that be overall? And that would be overall, even if we just had a little stopper on those lows down to 70 or 75, it'd be about a 240 pip weekly move. So it'll be hitting the weekly criteria. It'll be hitting 1 full day, 2 full days, almost 3 full days. So it'll be hitting the time criteria, and there would be 3 separate impulses to the downside, and it would technically be a stop run. So that's what we like to see, a move close in as well. So I would consider this a third push down, even if we just see a stop run on the lows on the pound, and that's something to watch for. What we're going to do, we're going to discuss playing the move into that stop run. The stop run is something that you guys can watch for during the London session, but where's the move down going to start from? That's a move we're capable of catching too. So catching the move, not only the potential stop run of the lows, if that is going to be the ending move, because you don't know if you're going to see a stop run of the lows. You can just discuss the possibility. You have to wait for the price to get there and show you. But one thing that we do expect is we expect a further push down, at least giving us a stop run, and therefore we need to look for a viable entry to take the short. And the one point I like, because I don't like the overall highs are way too far away, we won't see it push back into that level and create a stopper on that point. So the next viable option we have here is the highs coming to the end of the New York session. That's 55.20, and I also like the 20 level on the pound, obviously. So if we did come up out of Asia, create that stop run on that point, or the topping formation at that level, that's where I'd be looking for it to start from on the pound. I think that's the best viable option. Be very leery of the 54.85 level. In the scheme of the overall cycle, it's a very clear level. A stopper on that level would be would definitely have orders below that point. So if they're going to reverse the price, I would expect them to do it from there. And that the stop run at that level, I think, would be the clearest trade. It's just a matter of whether you're going to see it or not. The reason I think that we could see just the stop run there is we'll go over the euro after we've already covered the pound there, and look at the euro. The euro's technically given that third push down. So to me, the euro's completed that the third push. It's happened over the course of 1, 2, coming up on 3 days. And so if the euro here gave me draw this out, gave me this bigger, get rid of this third line. If the euro gave this right here, this nice bottoming formation, possibly with that the second impulse down, which would be the second test to complete the bottoming formation, possibly blowing through the first point by 5, 7, 10 pips or so, and then reversing from there. That would be giving me a stop run bottoming formation at the end of the third weekly cycle, and I think that's the best option. I wouldn't be looking to trade the euro down because it looks like the cycle's complete, and therefore if the euro blows through these lows and continues to run, that would be a trade that I would miss. The trade that I would catch on the euro would be a stop run or a completion of the bottoming formation on the euro. A trade move through those lows would be a trade that I would not catch, because I'm not expecting that, because we're playing off of, first and foremost, the weekly cycle. If the weekly cycle is complete, then we're going to look for the reversal. That's the safest bet. That's the safest trade, and therefore that would be the safest trade to look for would be a stop run or bottoming formation at those lows on the euro on the 15-minute chart. Because, again, we have completed the third push to the downside. Although there was not really a great entry, it still gave a third push to the downside today, in my opinion, on the euro, which is why we're looking for the reversal. Even if it continues down in 3 more cycles, what's it going to do? Well, we're going to see generally going to see what looks like a false push up. Even if, again, this is just hypothetical. Even if, let's say, the market's going to continue down, what are they going to do before they continue it down in another 3 cycles? They're going to drive it up, create one false push. Why are they going to do that? Well, number one, that allows them to close out a position. They're obviously short. In order to close that position, you have to buy it back. As they buy it back, the market begins to work its way up. As they close out that short position, they bought all their position back. The market begins to fuel itself to the upside, which induces buying pressure. And if they want to go short again, what do they need? They need that buying pressure. So they begin to create the buying pressure by buying back a position at the lows. As they close out their position, the market begins to work its way up. The rest of the market piles on, as they often do. That greed and fear pulls them back and forth. So they create the move. They start it. The market propels it. They've already, say at this point, they've driven the market back up, 40, 50 pips off the lows, and within that 40 or 50 pip area, possibly through here, and through all this sideways accumulation, they've exited their position, but they've driven it up enough to where the market thinks that, okay, the market's going back up. Everybody on the retail side begins to pile on. The market continues to work its way up, and as the retail side begins to pile on, that's where smart money begins to sell into the buying pressure that they created. So it's a twofold purpose of why you see the reset. If you don't understand the resetting of the levels, or the false push, whatever you want to term it, make sure you ask questions on it. Make sure we cover it in the room. Make sure we cover it in the forum. Wherever you want to ask questions, shoot us an email. This is something that it's important to cover. That's why no matter what, we always expect a reversal at the end of a 3-push cycle, because even if that reversal is going to fail, you're almost always going to see that at least one push the opposite direction, because they need to, number one, close out a position and re-enter a position at a better level. So that is the purpose. And if you need some more clarification on that, feel free and shoot us an email right in the forum, or wait until the live room, and we'll be happy to cover it there. So I do prefer the stop run of the lows on the euro. That's the safest option. If the cycle's over, I'm only looking for the reversals, and the best stop run level is that 2043 level, which is the overall lows from today during the New York session on the euro, and that's what I'd be looking for as far as that's concerned. So if you have any questions, feel free and ask, and I will see you guys tomorrow with the next daily market review. Until then, happy trading.